Yeah, so the L1 will need a native token. It's not even necessarily to pay gas. I think people often focus on gas, but the main reason the L1 needs a native token is like you said for the staking. There's just no way to run proof of stake without a native token, and that is like in my view that is sort of like the only thing you really need an L1 token for. But it's a super important one. Like uh, there's no way around it.
We've teamed up with the Wormhole Foundation, stewards of the Wormhole Protocol, the leading interoperability platform powering cross-chain transfers for 200 plus multi-chain teams. Claim your unique Wormhole NFT just for 0x research listeners today. Pear is an innovative pair trading exchange built on top of Simio. Users can trade trending narratives with one click, from blue chip narratives such as long BTC, short ETH, right to the WIF versus bonk. The hat stays on. Simio's intent-centric architecture enables deep liquidity, source off-chain, and broad on-chain, and combined with Pair, has democratized access to complex trading strategies typically reserved for institutional traders. Before we get into today's episode, just a quick disclaimer. The views expressed on this podcast by either myself or any guest are their personal views and do not represent the views of any associated organization. Nothing in this episode should be construed or relied upon as financial, technical, tax, legal, or other advice. All right, let's jump into the episode.
What's up, everyone, and welcome back to another episode of 0x Research. Today, we're joined by Jeff, co-founder of Hyperliquid, an order book-based decentralized exchange. Thank you for joining us, Jeff.
Thanks for having me on.
Before we get started, do you want to give a brief overview of Hyperliquid and how you guys see it fit into the space, both as a DEX and an L1?
Sure. Hyperliquid is most well known as an on-chain perps DEX. It really took off around 6 months ago. At this point, I think it has captured a lot of the mind share of decentralized perp traders and has really pushed the boundary on what can be done and what is sort of table stakes in terms of UX for decentralized trading. To the point where most users who trade there use it as their primary venue, even over centralized exchanges that they also have the option to use. So it's been really fulfilling to sort of like see that through and push the boundaries on like what's possible there. These days, though, Hyperliquid has also expanded into being more than just a venue to trade perps. In the process of building out the decentralized exchange, the dev team really had to invest a lot into infrastructure. So that included building our own L1 and then innovating a lot on the VM on top of it as well. And at this point, a lot of the work has been done to where we want to have this infra support more than just perps trading. It's a very unique opportunity. Hyperliquid, unlike most other L1s, has a lot of the key ingredients to a financial ecosystem. Has a bunch of users who love the product and stick around and use it. Has a lot of liquidity. One of the, I would say, like top 20 TVL L1s, despite being only one application really until very recently. And I think liquidity and users are the hardest things to get for an ecosystem. And so given that that's in place, and then a lot of the infrastructure is as well, we're excited to sort of build out this next chapter of Hyperliquid.
Yeah, I'm looking forward to the L1. I feel like it's one thing that a lot of perp DEXs are trying to do, but I don't think it's been done very well so far. And I'm excited, like your perp DEX is fantastic. So I'm excited to see how you guys are approaching that. And I want to talk about the L1 more later on, but first you guys came into the perp space, let's say like over the past year, and you've been very successful. What do you think is like, the space is obviously very competitive. What do you think sets you guys apart? Like, what's some things that you think you did well compared to other DEXs that led to you guys getting a lot of mind share?
Mm-hmm. Yeah, I think on the surface, building an exchange or a DEX is it's a very simple problem. Like everyone knows how it's supposed to work. It's not, order books are not rocket science, but the devil is in the details. And I think it really takes a team with heavy background in quantitative trading, at least, to even like stand a chance to building a good exchange, whether even if it's a centralized exchange. And then when you make it decentralized, you have to really have a strong background in understanding like lower level infrastructure and like how to scale out a fully on-chain solution to this problem. So I'd say like it's not one specific thing. It's you like building an exchange is like at least 100 different checkboxes you need to check. And if you're missing any one of them, like if your UI is bad, the traders don't understand it. If your API sucks, like market makers can't trade through it. If your liquidity sucks, like no one can. Everyone experiences very high slippage. Like if any of these things fail, then no one's going to use your product. And so I think really it's like our team came from quant trading background, so checked a lot of the harder boxes to check, and then we really pushed ourselves to figure out what we were missing and to check those boxes. And yeah, it's really like a lot of hard work and grinding, like listening to users. There's no shortcut, and there's no one secret recipe. It's just like marathon of building this, endlessly like iterating and building this product, and like not being satisfied with any shortcomings.
And on that, what do you think is required for DEXs to reach parity or at least increase their market share when compared to centralized exchanges in terms of perpetual DEXs?
Yeah, I think that's sort of a mystery to everyone. From my perspective, I think every exchange kind of needs to do something new, whether centralized or decentralized. So if you're Binance and you were looking at BitMEX and just thinking like how can I be BitMEX like back in 2016 or 2017 or whenever they were thinking about this, I don't think they could have. Like I think they really needed to come and innovate and offer users something that's 10x better. And I think for Binance the big thing was like they really took over this spot market and like had long tail listings. And then by the time they came into the perps competition on the centralized exchange side, they had a lot of the users and sort of like, spot sort of incumbency advantage. And so I think like DEX coming in kind of needs to ask the same questions, like what can we do better than Binance? It's not just like, like build something that's like close enough and then like users will switch over. So with Hyperliquid, we innovated on just about everything we could. And I think like in many regards, it is actually better than any centralized exchange you can trade on. And then in other regards, it is like kind of reaching parity. And I think there's like, for things like liquidity and just like throughput and responsiveness for market makers, like that stuff it's really important. There's no easy way around it. You just kind of have to like build good tech. And so that's another thing that we focus on day in and day out.
I want to kind of talk about the vault system because you guys don't only have the HLP vault, but you also have individual vaults. Like I can create a vault and tell people, look, I'm going to be, let's say, pair trading over the next 6 months, and I can encourage people to deposit. I feel like this isn't a vault system that's been tried very often, and I thought it was I talked about this on an earlier podcast as well. I thought it was a great marketing tool as well because people obviously want to post about their vault. I kind of want to understand if you thought that this approach was successful, like as a product, and why you guys decided to launch this. Because as far as I can tell, I think there's only like 2 more products that are like this, and they're not very popular.
Yeah, this is a pretty funny story because we actually built the vault primitive. It really is a primitive in the L1. So people think it's a product, but it really is just like an L1 op. It's like a signing primitive. So like when on Hyperliquid, the nice thing about building an L1 is that you get to customize like the ins and outs of it. And people think we're just like making an excuse to make an L1, but like it's actually very essential to building a good product. And so the vault primitive is like if I want to sign on behalf of an address, I have like many choices. I could have the private key to that address and sign using it. And that's what all the general purpose L1s use. And that's cool. Like, if you're an API user, you're probably gonna use that. But like the vault primitive is like pretty cool because you can create this address and then you can sign on behalf of it, but like not have permission to like move the funds in that address. And this address ends up being this sort of like copy trading primitive. And really the only reason it was built was to release HLP. But there was a bit of an afterthought of like, well, like why not just, like we have this whole thing built, like why not just like let people use this primitive? Like it's permissionless anyway. And who knows, like maybe people will like come up with cool strategies. I was thinking initially things like Uniswap pools could be, like V2 pools especially, could be replicated as like a very simple vault strategy. And it would just perform better because it wouldn't have this, I guess like it would be like it could actively get out of the way of toxic flow, unlike Uniswap, which gets arbed. But turns out nobody really cared about that, but they like took it in their own directions and had a lot of cool, innovative ideas. And honestly, it kind of exceeded all my expectations. And it took many months before people like realized they could do these things. And so it was kind of this like sort of exception to the rule where seems like usually you need to really think about a product, but sometimes when you build the right primitives and nobody else, you can't do this anywhere else, then people will just like naturally kind of use it and like market it. So yeah, that's really the whole story. Like it's not really some like deeper thinking behind it.
Cool. And your bridging experience is probably one of the most seamless I've seen in terms of UX. It almost doesn't feel like bridging. And so I was wondering, how did you guys approach this? What were some choices you had to make, maybe in terms of trust assumptions? And also if there are plans to add bridging from other chains and how this will look like in the future.
Yeah, the bridging we've thought a lot about. I think we actually have probably spent too much time thinking about it. Like I sort of regret how much time we spent. But the end product is like people can see the bridge, and at least it's open source, and we got audited twice. People can read it. It's just like 2,000 lines of Solidity, but it's just a custom bridge. So the trust assumptions are that the bridge is secured by a quorum of the L1 validators, and there's a system by which if there's some exploit, there's a wider set of sort of like monitors. It's sort of like the dispute idea behind the Arbitrum bridge, where the bridge can be locked, and then it requires a quorum of cold wallet signatures by the same stake weighted validator set to unlock it. I think that's like basically the whole thing. But there's just like a lot of details there, and then like integrating it seamlessly with L1, like you said, which makes the UX actually good. I think this is probably like at least a quarter, if not half a year of iteration and work. And yeah, I think we considered many alternatives like IBC or maybe some other like more bespoke solutions, but realized that like the bridge is really like the first thing that someone interacts with. And if you sort of outsource that to another project or protocol, then you risk like that thing not being optimized for what you're trying to do. And our experience with like other bridges was generally that it's like they generally leave some UX to be desired, and so we kind of just took the work of like building the whole thing ourselves. And then yeah, as for your other question, the ultimate plan actually, like with the Hyperliquid EVM coming out, a big reason is to be able to support a more diverse and more sort of like institutional set of bridges. So one particular thing we're super excited about is supporting native USDC. And so right now, like this custom bridge is somewhat of a bottleneck to getting like institutional capital onto Hyperliquid, because maybe an institution like doesn't want to use Arbitrum, and like it's just like sort of the single point of entry for the Arbitrum bridge onto the Hyperliquid L1. But once the EVM is there, CCTP will let anyone sort of like as trustlessly as you can, like burn USDC on one source chain and like mint in Hyperliquid. And so those things like that, also for other spot assets, we want to solve this like whole problem in a relatively general way, and that's actually a big motivation behind putting the work into this Hyperliquid EVM as well.
Yeah, that makes a good segue to the next question I had regarding the Hyperliquid L1. It feels like a few months ago there was this shift towards extending the L1 and not be only a perp DEX. And was this always the plan, or what was your rationale behind it? Is it something that you noticed made sense along the way?
It definitely wasn't our plan all along. Initially, we just wanted to do anything that would be helpful for sort of like crypto community as a whole. So I guess like backing a bit, this was 2022, and we were trading pretty heavily on a lot of centralized exchanges and in DeFi as well, and kind of had just like a pretty good view of everything that was going on, and we're kind of using a lot of these protocols that were coming out and realizing that they were basically all not very good. And so when the FTX thing happened, we felt very strongly that like we should the space sort of like lacks builders. Like FTX was sort of like this big icon, and like they were like built for traders, and they kind of like betrayed a lot of trust. And then like, but like people are like, oh, like this is DeFi's moment to shine. But then like we were just like trading on DeFi all the time, and we were just like, there's no way that like any of this stuff can match what FTX had going for it. And so it just felt like, what could we do best? Like we could just build an actually good decentralized exchange that is like fully on chain, can sort of scale to actually like just scale to the scale of finance as a whole, but also start kind of humbly and like actually get users and like start with a market that like we knew in and out. And so that was always the initial plan, was just like, what can we do? Like, what can we contribute? And but slowly, like as we sort of do things, and users sort of give us positive feedback, I guess like the sort of ambition kind of just grows, and there's a bit of just like you initially assume that everything is good and you just need to build this one thing that you're really good at, like potentially really well suited to building, but you soon realize like, I don't know, like you maybe just need to keep going down the stack to build it more and more, and then at some point you're like, okay, like we should just like also release this like all this other work we're doing, and let other people benefit from it. And so the L1 kind of came from a lot of users. A lot of our users are actually like really good developers as well, like want to make these dashboards, like want to build these products on Hyperliquid, like want to launch things. And we've always just been like, okay, yeah, it's like mostly a perp DEX, those, like, but let's see how we can support you. And at some point it just clicked, like, yeah, we have all these like really talented builders and community members, and why not just like actually give them the tools to do everything they want to do.
One thing you mentioned in there was that you guys are fully on chain. I think like a lot of people assume that most order book protocols are fully on chain, but they're not. Like a lot of them move their order book and matching engine off chain, or at least parts of it. How are you guys managing to keep everything on chain? Like, what is your approach that you would say that doesn't have or face bottlenecks, and you can put everything on chain fully?
Yeah, initially we used Tendermint because it was the most battle tested consensus mechanism that was easily like modified. And with some modification, it wasn't too hard to get it to do around 20,000 transactions per second. So that was the initial thing, and like initially there just like weren't that many orders, so it was fine. But yeah, at this point, the Hyperliquid L1 has fully migrated to I guess what we call HyperBFT, but really I want to say like we didn't actually invent this consensus stuff. Like there have been a lot of like really good research, and almost all the L1s use this sort of like consensus research from the last 5 or 6 years. So credit where credit's due. Like we're not consensus researchers. We just like read these papers. We're very impressed by the metrics. Spent half a year reproducing them, and going from academic paper to a production implementation is not that easy. But like the core ideas are out there, and we basically just did the hard work of implementing it by hand, and I think just paying very close attention to all the low level details to make sure that the throughput doesn't degrade as you actually implement it. And so at this point, the consensus is not even a bottleneck. I think if execution gets faster, like consensus will just keep up. I think the bottleneck is first execution, second the like hardware, like network bandwidth, etc. And then at some point, it's like I'm sure that the bottleneck will be the consensus again. But like I really think that at that scale, it's like you can basically run Binance on like fully on chain.
And still on that, can you describe a little bit how the HyperFBT is different from Tendermint?
Yeah, the core difference is just that Tendermint is based on older research. So at the time it was written, this like hot stuff had not been written, and I assume that hot stuff was heavily inspired by Tendermint and other algorithms. Like basically the whole like standing on shoulders of giants thing is definitely true in research. And so I would just say that it's like an iterative improvement. So like one key difference is Tendermint has like sort of some like built-in weighting So it just like how the algorithm works, there are like time scales. Whereas with HyperBFT, the algorithm itself is like more asynchronous. So like you don't have to say how long do I need to wait before I do something in this like multi-step process. You just the steps look more like once I have enough votes, which in this case is like more than 2/3 of the stake, I'm happy to like vote on this block and progress to the next step. And like no one anywhere, no validator anywhere in this network is in the happy path of the algorithm is waiting for a designated amount of time. So like when the network is flowing smoothly and people are not timing out in the algorithm, it progresses as quickly as information can be transmitted between the validators. I think that is one big core difference. That's what basically lets the block times like not really have a lower bound. And I guess another big difference is that Tendermint was implemented earlier and is a result of, I think, a lot of trial and error, and began as an academic implementation, was more research focused. So there are just like a lot of small things in the code that are like not that interesting when you look at them one by one, but when you add them all together, do just like make a huge difference in production performance.
Wormhole is the leading interoperability platform for multi-chain bridges and applications. With over 1 billion messages sent and 40 billion in value transferred, Wormhole leads the industry in cross-chain message volume and total value transferred. If you're a builder, Wormhole has an extensive suite of tools and infrastructure to securely build multi-chain applications. You can use Wormhole to power DeFi, NFTs, governance, and so much more. And Wormhole supports over 30 blockchains and 6 different runtimes. Claim your unique Wormhole NFT just for 0x Research listeners today. Fill out a form, prove that you've listened to today's episode to receive a Pear app, and you'll get an email over the coming weeks to claim your limited edition NFT. Pear is an innovative pair trading exchange built on top of Simio. Users can trade trending narratives with one click, from blue chip narratives such as long BTC, short ETH, right to the WIF versus bonk. The hat stays on. Simio's intent-centric architecture enables deep liquidity, source off-chain, and broad on-chain, and combined with Pear, has democratized access to complex trading strategies typically reserved for institutional traders.
You mentioned earlier that you guys have a lot of people building on top of you, or you had, and then that's how you guys kind of evolved the product. I feel like that's the dream of most like developers, but I kind of want to ask, you guys I assume you're allowing permissionless smart contract deployment eventually on the Hyperliquid L1, or maybe day one. Is there are there any products that you're looking forward to for people to launch, like a new vault system or anything of the sorts? Like GMX in its early days gained a lot of attention just by people building new products on top of them. So I'm wondering how you're thinking about that.
Yeah, we're pretty happy to let the community do whatever they see fit. So we're trying. I think that the nice thing about general purpose platforms, like I think I mostly say bad things about them because it's always in the context of like, well, you can't use this to build a perp DEX. And I think I've like just tweeted this like over and over again, and I still believe that. But there are really cool things about permissionless smart contract systems, which is just that like you don't need to say what you want people to build. You give them the tools and they build it. And I think that's like very powerful. Our vision though is like how the two fit together. I think this is like quite unique to Hyperliquid, and I think potentially we should be explaining this more to people, because people assume that this EVM is just coming because like EVM's cool, like people can build on it, and like maybe we think people want to build on it. But that's the real reason is it's like this sort of like it will be the thing that takes the Hyperliquid L1 from a very focused like application chain. It will let it kind of grow fully into the application, which is, you know, at this point like trading, like spot and perps trading. You like in order to do perps trading, like a big thing is you want to make it easy to onboard. And so like the EVM solves that, because there are all these like bridging protocols, and they love to integrate with EVM. That's like the first thing that like any one of the big bridging protocols like makes sure to integrate. And it's like, okay, check that box. Spot trading, you need bridging of like canonical spot assets from other chains, like, you know, ETH, BTC, Sol. These things like, you know, also solved by the bridge. And even more importantly, like you really want native assets on your chain. Like, why has Solana done so well? It's because like there's this new wave of builders who who choose Solana and like build on it. And when your native application is on Solana, you're like obviously like the most natural place to trade the native asset is to not bridge it somewhere else, but to like just trade it on the chain if it's possible to do on your chain. And like Hyperliquid is the best place to do that. And so there's this natural synergy there with building as well. So there are all these reasons that like really like an EVM in some sense is like a generalization solution of this like already scaled out system. So instead of like starting with the general thing and then like scaling it out, we're like starting with a scaled solution, which we are pretty confident can scale to be Binance and bigger on chain, and then like building the generalization atomically into that. That's kind of like the vision. So concretely, I guess it's like we don't expect there to be like replicating things that are like what Hyperliquid L1 has natively right now on the EVM. Like people are welcome to do that, but I don't expect that to gain that much traction, given that users of Hyperliquid probably are using it because they like order books and like GMX style vault. Like, not sure that's that interesting. Yeah. But something like there's a huge long tail of finance that could be built natively, but I think is better suited for these permissionless things. So things that I think would be really cool would be like a borrow lending protocol. There's a lot of work been done there on the EVM. There are a lot of like really big projects, a lot of TVL, and these kinds of things. You know, it's not super like gas constrained. It's not super high throughput, but it's like super valuable. Like if you like one of their biggest requests is like, can I deposit ETH as a collateral and then trade like, you know, I either like do the funding arb with ETH itself or like trade some other coins that are USDC margined. And this suddenly like, you know, it becomes like we don't have to build that into the L1 itself, which is quite a big undertaking. There can just be this like borrow lend protocol atomically built into the EVM that's composable with the Perp stacks. So things like that I think are like really cool, and people have already expressed interest in building these kinds of things. So I'm really excited for that kind of stuff.
Are you worried about congestion or block space at all if you're allowing other primitives to build on the L1? I mean, from what it sounds like, the L1's very performant and it should be fine, likely. But I'm just wondering how you guys are planning on approaching that.
Yeah, so we're actually not. I think another big misconception is we're not like pivoting to building a performant EVM or anything like that. So I believe in Hyperliquid, the EVM will just have less demand, and I kind of hope it is like that, because if you look at like I don't know, I haven't run these numbers, maybe you know, but if you look at Ethereum and you look at end user transactions that go through that like do something that is already done on Hyperliquid, so like that includes like Uniswap, like USDC transfers. It also includes like L2 blocks that are actually like on the L2 side, like end users doing these like simple financial operations. Like if you added all those up, like I don't actually know how much of Ethereum's block space that is, but I would guess it's a very high percentage. And so like when you move all that to like some native application, I do think that like genuine demand for the EVM space decreases. So it's sort of like an alternative way to scale an EVM, which like no one really talks about, is like you take the things that really shouldn't be built on an EVM or like any virtual machine for that matter. Things that really ought to be built natively into a protocol. Do that, and like that does just alleviate all the congestion. And so that's like our hypothesis going in. I think like if there is just like actually like immense demand for this EVM, then you know, I'm not saying that like it can't be scaled, but I think we would want to see evidence that that's going to happen before sort of like formulating a plan around it.
Yeah, that makes sense. And I'm really excited about some features now with the native EVM. Just maybe for a little bit of context. So just this Monday, you announced that the Hyperliquid L1 will support a native EVM. And as I understand it, a really exciting feature brought by this integration is that the HIP1 assets will feature the atomic transfer with the corresponding ERC20 contract. And so what can users expect from this upgrade? How do you think it will change the way they interact with the product?
Yeah, so the thing you mentioned is the example we gave. I think it's the most obvious one for why this EVM is not just some like isolated new feature. So the idea is like like right now, very very soon, people will be able to permissionlessly deploy HIP1 and HIP2 on mainnet, which we're super excited about, and we think will already be really cool for a lot of builders. But with the EVM, I think this gives builders confidence that soon they will literally be able to do whatever they want. So you can right now you can launch a HIP1 asset with a corresponding HIP2 like Hyperliquidity, which is this like on-chain order book liquidity provision strategy. And you can do this today, and then when the EVM launches, the HIP1 and 2 deployers will be able to specify a corresponding ERC20 contract on the EVM state, and the EVM state and the other L1 state are composable. They're like atomically one state that is agreed upon by consensus, and so there will be a mechanism by which HIP1 token balances and ERC20 token balances are fungible in some sense. So it's like it's not a bridge; it's like an atomic transfer basically. And so this lets you, if you're a builder and you're thinking about using EVM, which I think many builders are, and you're looking for someone to build, things like a really strong pitch to the builder because like for a builder, the two important things are like which chain you're building on and how can I decentralize the supply of the governance token or the gas token or whatever you're issuing for your project. And the first one, it's like, yeah, pick EVM, pick SVM, whatever. Second one is like, okay, like probably gonna have to go to Binance, Bybit, Coinbase, whatever, and like I kind of asked them to list your token, and they kind of the exchange has a lot of leverage in that discussion, and I just think it's like not a very good system. And so Hyperliquid, being this completely open platform to trade on chain, and to have that be atomically happening on the same chain you're building on, I think is like really powerful. And so yeah, if you had Binance and Ethereum or whatever scalable solution you wanted, atomically composed into one unit, then like that is sort of the vision for the Hyperliquid EVM.
Perfect. Last question on the L1. Current traders, they don't pay gas to use the L1. How will decentralization and like introducing a native token affect costs? And what challenges do you guys think you'll have as you introduce this and try to decentralize the validator set?
Yeah, so the L1 will need a native token. It's not even necessarily to pay gas. I think people often focus on gas, but the main reason L1 needs a native token is like you said, for the staking. You can't. There's just no way to run proof of stake without a native token, and that is like, in my view, that is sort of like the only thing you really need an L1 token for. But it's a super important one. Like there's no way around it. And on Hyperliquid, there's no plan to require the L1 token to trade. Like obviously things can change. Like maybe there's some like novel new mechanism by which like trading like makes more sense and involves L1 token. But there's no reason to think that will have to happen. So the thing you mentioned with trading being gas free is actually not. It's not like a Band-Aid solution. It's not like it should be costing gas, but it's not. It's rather like the L1 itself is so custom that we can actually have the same properties as having gas, like a native gas token charged per transaction, but rather have it be through this other mechanism. When the transactions being considered are trading, you can basically use a combination of fill rate and trading fees to make guarantees about how much is paid per, I guess, like per throughput or per state, per like state bloat, and that really is the purpose of gas. And so like as long as the protocol is charging for what could be DDoS, whether it's state or throughput based, it's fine. And so the system Hyperliquid, like at first glance, sort of seems like we're just like brushing this under the covers, but it's actually like been thought through very carefully. There may still be issues with it, but I think the fundamental idea is sound. And I think there's like a lot of write-up in the docs about how this stuff works. It does force people to kind of modify their strategies a bit if they're market makers, but people are usually have, at this point, it's kind of well known how to adapt to it. And I think it's quite a scalable solution, and gives the nice property, like you said, is like if I'm a user first time using Hyperliquid, like I don't need to go buy some like random token I don't want to hold just to use it.
Yeah, that makes sense. And I was thinking the points program ended at the beginning of this month, but Hyperliquid actually managed to maintain its position in the top 3 perp dexes in terms of daily volume, at least. And compared with other points programs, I noticed that you didn't draw much attention for it, for example, with boosts, multipliers, or other partnerships, explicit rules. Do you find like that this helped attract the right type of users, or what do you think was your secret here, besides it being a good product?
Yeah, it's a good question. I think we didn't think too much about how we could market the points. I mean, they are just like we're pretty big believers in simplicity. So it is just, it's a number. It doesn't have any value. It's meant to signify to a user like how much they've contributed to the protocol. And we kind of like just feel like it's like simple, it's self-explanatory, and really we don't want people like thinking too much about like that number. Like you said, we want this product to kind of speak for itself, but it's a little bit of like something for people to talk about, something for people to like maybe like catch their attention, someone else talking about their points, like, oh, let me check this product out. And I think it by and large like worked to that effect, and people generally like the product, and we're pretty happy with that outcome. I think like one big thing that we took a gamble on and that I think has paid off is just making the points completely opaque. I think a lot of protocols launch points with the intention of inflating metrics. I guess no comment on whether that's like a good or bad idea, but if you're doing that, you kind of want it to be explicit. Otherwise, you're really not getting the value you want. Like if you would rather tell someone like you will get 1 point for every $1 in fees you pay, and then people know exactly how to calculate. Like they may just have like some formula in their mind and they can calculate and do exactly what inflates the metrics more. We felt very strongly that this is like not a good idea. Like we don't care about short-term metrics. And so taking that gamble, I think was good, because there's just like a large set of users who I strongly believe like you can just kind of look at the numbers, like they make up a very large fraction of the volume on most other perp dexes and dexes in general and chains in general. There's just like large set of users, and they're very like, I don't know, they're like very fleeting and mercenary, and not that they don't provide any value to a protocol, but I think we just decided that not super valuable to Hyperliquid's long-term vision.
I feel like those the points programs that you mentioned where they're very explicit and they inflate the volume or activity or whatever, they're usually, as far as what I've read, they're usually to entice funding or like VCs, etc. And this is actually one thing that I wanted to ask you about, is that you guys chose to bootstrap the protocol instead of raising external funds. What was the choice behind this, and like how did you guys end up actually doing that and bootstrapping the protocol? Because your fees are reasonable. It's not like what GMX fees were a year ago, where it's like on open and close you pay something double of what other protocols ask for.
Yeah, I guess first I'd like to clarify the last point, which is that we actually the dev team does not collect any fees from the protocol. So all the fees go to a mix of the insurance fund and and mostly to HLP. And so like, yes, the fees are low. I think we feel very strongly it's like so early in DeFi, and there's so many ways in which DeFi is harder to use than CeFi still, that fees being low is like sort of a bare minimum to getting some new users. So that's a product decision. That being said, the protocol has collected a lot of fees, and so if it were a business, it would be very profitable. But that being said, it is not a business, and I think we could potentially be more clear about this. But we try to say it like every so often. But like the team has never taken even a cent of the fees. And this is because we just like we believe so strongly long term in the project that we just don't need the short term money, and we don't want to people ever to be able to like have anything to say about like, oh, this like insider teams like making so much money off these fees. Like I don't know, there are like a lot of negative things you can say in that line. And I think like a lot of protocols do make this choice and kind of have to suffer those criticisms. And so yeah, that's just how we operate. And as far as fundraising, I think it's like a similar story. I think there's a lot of interest in investing, but ultimately Hyperliquid is very like long-term oriented. So if the goal is to really be the platform on which all finance happens, this is like a very long-term vision, and there's a lot of hurdles there. And I think one very important thing will be like what decides the like ultimate financial platform of the future will be that there are no insiders on the base layer. I think VCs provide a lot of value. I think it's like I think a lot of the economy, like has VCs to thank for that. And I don't want to shit on VCs in general. It's just there's a very unique opportunity with Hyperliquid to be something more like Bitcoin, where like I think if Satoshi took a pre-sale and or like a VC invested in like Satoshi's initial like mining setup or something, like I don't know, like I think Bitcoin just wouldn't be Bitcoin. And not literally comparing Hyperliquid to Bitcoin, but I think that is like one prerequisite to being a neutral platform. And that is like the ambitions are just that big. And so we are like checking that box, and I think it will be important.
Yeah, and maybe zooming out now a little bit more, I wanted to ask, how do you see the longer term future of the space in terms of multi-chain, dedicated chains, one winning chain? Because it seems like there are highly contrasting approaches even within the Perp space. For example, Vertex Edge and Hyperliquid, we could say that Vertex Edge accepts the premise that there will be always a lot of users on different chains, and so tries to aggregate this liquidity through off-chain matching so that deployment on more chains brings more liquidity to every chain. And Hyperliquid maybe takes the opposite approach of growing its chain with more use cases and more protocols, kind of consolidating users in one chain. How do you see this? Yeah, how do you think about this?
Yeah. So I'll caveat this by saying that I don't have too much time to philosophize on like super large scale stuff. So I'm probably not the best person to ask for this question, but my personal view is that it's somewhere in between. Like, I think finance should happen on one composable chain, but I don't think everything should. So like if you have a game where the items are tradable and there are just millions of users using it and like doing things, like I really don't think that ought to be competing with like like derivatives on Bitcoin, where Bitcoin is like the reserve asset of the world. And there's just like completely different scales of sort of like importance. And I think it's like totally fine for those to just like not compose at all, because like there's no reason for them to compose. But I think finance happening on a bunch of different chains is just bad. Like bridges are super risky. I think right now it's fine because crypto's so early, and like generally I think teams are well intentioned, and even centralized exchanges, like I think broadly like they're like mean well and like are trying to do good things. And but it's just not the like, it can't possibly be the ultimate solution. And so if you don't think centralized exchanges are good, I think you should have a similar skepticism towards bridges, because it's just like one layer removed. It's still like a lot of trust assumptions going in, and just like not I guess like atomically composable with other things. And so yeah, I think with Hyperliquid, we've always, at least thus far, we've always just thought of ourselves as like we're trying to build what's good for DeFi, because that's obviously the product market fit that crypto has found. And it's very clear that even if crypto is good for nothing else, I think it's very clear that it's like a better financial system. It's more accessible. It's more egalitarian. Than like as the world, as inequality grows in the world, I think it's like more and more important for finance to happen on chain. And so in that narrower scope, I guess I'm a huge proponent of like a single chain.
Yeah, I agree with you. I think anybody who's used DeFi enough knows that fragmentation like is just horrible UX, and not in just in the sense of like you're not having fun. It also like diminishes efficiency and just actually trying to get benefit off of DeFi. I have two more questions for you, Jeff. One is, what are you guys going to be doing with Hyperliquid over the next 6 to 12 months? Like, what are the plans? And the second one, which I'm going to ask now because I feel like you're going to answer it, and I want to ask it. How do you see the competition landscape for Hyperliquid now versus in a year?
Yeah, so we're a super small team. I think people are often pretty surprised. We actually we're 5 engineers and we're fewer than 10 people total. And so we're not like those teams that like pretty common in crypto where it's like you have a very very long term vision, like raise a lot of money and sort of like have this like many year roadmap. I think that's cool. It's just like that's just like not our strength. We're very much focused on like the next thing to build. I think it's like we very confidently are stepping in the right direction, but we don't plan out like 100 steps. So 6 to 12 months, I think by then the EVM should be live. The network should be decentralized. And I think those two things we're very bullish on, but I think they're also very uncertain. So depending on what happens there, like there might just be like a ton of issues that come up and we just need to, like that just ends up being the highest priority. To the extent that there aren't, I think it will be whatever it takes to continue pushing the Hyperliquid L1 and the ecosystem around it to being the place that like financial applications start to flock and like start to build around. So whatever kind of pain points developers come up with, whatever if like users, market makers, etc., like start to face issues as it scales, MEV, whatever comes up there. I have a lot of thoughts there, but probably not the right question to answer right now. Whatever comes up, basically, that will be our focus. And at the end of the day, it's always the users, and the definition of user is like always changing. So initially it was traders, and it's like traders and market makers. Now it's like traders, market makers, builders. Whatever they need, and we can help with. That'll be our priority. And yeah, as far as the competition question goes, I probably don't have anything super insightful there either. We don't really think that much about competitors. It's not really clear who our competitors are either. I think there aren't really any projects trying to do the same thing, which I think usually is a bad sign. Like if you have a startup and nobody's competing, then it probably means your idea is bad. But I think Hyperliquid at this point is just like trying to do such a general thing while still having a laser focus on the core product. It's very unique there. I mean, the chart that I always look at, the number I always look at is like Binance Perps volume in the denominator and like Hyperliquid Perps volume in the numerator. And like, looking at that, like, yeah, I mean, I'm always extremely impressed by Binance and I guess like the top central exchanges in general. They do such a good job at, they like do one thing very, very well and, put their users first and, and manage to like maintain those users. Like it's like Binance in particular, like they've gone through so much and users still trust them and use them. And like that, I think like I look at it a lot. I'm always impressed by the volume numbers. But from our perspective, it's, we're building something different. Like DeFi is just, earlier, it's more nascent. It's like for a lot of people, it's not it's not time to switch yet, and we recognize that. And so we think about our competitors. We're like, whatever we can learn from them, we try to do, but we're also trying to pave our own way. And I think everything that Hyperliquid has done well so far, I think has largely just been like not from studying competitors and like trying to emulate something, but from just like thinking about first principles and coming up with something entirely new. So whether it's like like the vaults primitive, or this like I guess like even how permissionless spot listings work, or like having gas lists on chain perps order books, which no one thought was possible. Like this liquidity vault that like does market making in an accessible way that anyone can deposit into. I think these are all like firsts, and these are the things that Hyperliquid are known for now. So I think our goal is always just like continue like inventing new things, and I think that's also like what really adds value to the world. Like if you like see some competitors doing well and like do it like just slightly better and like get some of their market share, I don't think that actually that doesn't really move the needle much on advancing DeFi as a whole.
Perfect. Thank you so much for coming on, Jeff. This was like one of the most interesting conversations I've had so far, and I feel like Hyperliquid is something that I just like can't get enough of. Kind of, it's because you guys are kind of, how do I put this? Not secretive, but I guess not as public as I would assume with interviews and everything. So I'm actually really happy to have for example, I wasn't expecting you to be such an on-chain maxi. It was kind of a surprise for me.
It's good to hear. Yeah, we're often just busy coding. Like I spend most of my time writing, reviewing code, and then thinking about product. And so yeah, my like Twitter game and interview game is definitely like pretty bad as far as founders go. But thanks for having me on, and it's always good to to chat in long form with people. And I think you had really good questions. Hopefully my answers were not too confusing.
Your answers were perfect. Thank you.
Thanks.
Thank you so much.
We have teamed up with the Wormhole Foundation, stewards of the Wormhole protocol, the leading interoperability platform powering cross-chain transfers for over 200 plus multi-chain dApps. Wormhole isn't just a bridge, it's the leading interoperability platform for multi-chain applications. So go and claim your unique Wormhole NFTs just for 0x Research listeners today. Hit the link in the description to fill out a form and to prove that you've listened to today's episode and receive a POAP. You get an email over the coming weeks to claim your limited edition NFT.